Hello everyone, welcome to episode 5 of Inside the Red Box. I'm Edward Backhouse and I'm joined by fellow Chartered Financial Planner at Brooks Financial, Sarah Wilson-Trainor.
Thanks, Ed. Hi, everyone. It's great to be here.
In this series, we've been discussing speculation about the upcoming budget. In today's video, having a conversation about a couple of the developments in the last week, especially regarding some of the bigger taxes. Now, much of that, Sarah, probably followed the announcement by Rachel Reeves last week.
Yes, Ed, the budget is going to be really interesting. Last week, we heard news about potentially breaking the manifesto promises, which will impact all taxpayers. That also caused some volatility in the UK stock markets.
Absolutely. And just as a brief summary, in the general election in 2024, Labour said it wouldn't increase the big three, if you will, being income tax, VAT, and national insurance. Now, this was something that it adhered to in last year's budget, in which inheritance tax and capital gains tax were amongst those hardest hit. But I'll just be focusing briefly now on those big three, which bring in the greatest amount of revenue for the government. So you would have heard as well that all the talk about income tax, Sarah, there's been a lot.
Yes. Yeah, absolutely.
For the first time in 50 years, it looks like the government may well be increasing income tax. Now, there is talk of this being a 2% rise. There are a few rumours that the basic rate band, up to £50,270 per annum, is going to stay at 20%, with the higher rate potentially going from 40 to 42 and the additional rate from 45 to 47, which potentially the government trying to bring in a great deal of tax revenue from probably one of the biggest taxes there is. Now, it's probably quite hard to plan from this from a financial planning aspect, given the uncertainty and the nature of how income tax works with the employed roles, etc. There might be a bit more creativity if it's a self-employed individual. There is talk on that similar route for national insurance contributions, whether the government is going to try and protect working people, if you will, by accompanying a 2% increase for income tax across the board, along with a 2% reduction in national insurance contributions. So this will primarily focus the additional revenue from other types of income, whether it be rental, investment, pension. So that's something that remains to be seen, and obviously wouldn't bring in as much tax revenue in that example, and the government may well have to look to other sources still, of which we'll come to. Finally, VAT. Many of you might have read about the government potentially reducing the VAT threshold, currently £90,000 all the way down to £30,000. Now, I think there was talk of this potentially bringing in sort of £2 billion, I should say, worth of additional revenue annually. But it is going to bring in a lot of small businesses into the VAT system, and in my view, have a very crippling effect. If you go into your hairdresser and there's an additional 20% cost, for example. So my suspicion on this is that it wouldn't actually raise as much tax revenue the government perhaps forecasts, with maybe other unintended consequences, such as more cash transactions. What else have you heard, Sarah?
Thanks, Ed. The biggest thing I've heard is potential changes to salary sacrifice schemes, which could be scaled back completely or capped at £2,000.
Yeah, I've heard that one as well. And I suppose, ourselves included, lots of employees use salary sacrifice, but it might just be worth explaining exactly what it is.
Yes, so with a salary sacrifice scheme, employees give up part of their salary to make pension contributions. One of the key benefits of that is that it's really tax efficient, because employees and employers save tax and national insurance on pension contributions. So it's not just for high earners, and it does encourage everyone to make pension contributions. The thing that really worries me about this one is it could have a profound impact on retirement planning. It also goes against the government's enforcement of auto-enrolment, which is where everyone has to join a pension scheme, because most auto-enrolment schemes are set up on a salary sacrifice basis. So it contradicts the government wanting people to have their own solid retirement planning and pension income. That one really worries me.
No, I would agree. And I suppose as shown by the 2024 budget, with the government included pensions in the estate for IHT purposes from April 2027, it's something that they could well do, and have a big impact on retirement planning.
Absolutely. The other thing I've heard is an exit tax, which could be introduced for people who leave the UK but still have assets here that haven't been sold. At the moment, you can leave the UK and emigrate and not pay capital gains tax, for example. I can see the rationale behind this one, because if we look back again to the last budget, we saw a lot of people leaving the UK because of the changes to inheritance tax. That's a loss of tax revenue throughout their lifetimes, which could be a large number, especially if a lot more people leave this time. So I can see a reasoning behind doing it, but I do think it would be hard to enforce, hard to put in place and police. So we'll need to see where that one goes. The final thing that we've heard so much speculation on is changes to property tax. Now, we've seen everything from reform of council tax, tax on the main residence, and you name it, we've seen it, basically, if it's anything to do with property. I think that's the issue with this one. There's been so much speculation. We do just need to wait and see what they're going to bring in, if anything.
Yeah, I'd agree on that sheer array of rumours in regard to property taxes, changing stamp duty, capital gains tax on your main residence over a threshold. Those are two more that I've seen.
Yes.
But I suppose it comes to something that you and I were discussing earlier, the risk of making such big decisions based on speculation.
Yes.
We touched on episode 1 of Inside the Red Box about seeing people trying to take money out of the pensions in terms of the tax-free cash if the potential changes there. It now looks like that won't happen. The tax-free cash limits may well be kept, is what the latest rumours are just coming out in the last few days. Something that we thought might happen on that episode 1, but there was a huge amount of people that have lost, not just in this budget, but in previous budgets where they have just sort of preempting what's going to happen and taking a big risk with those decisions. So it's every circumstance is different, and when in doubt, get advice.
Yes, I think I'm 20 years in this industry now, seen more than 20 budgets. The most important thing is to take advice, don't act in haste. You could do something which may make the situation worse if what you predict in the budget doesn't happen. It's, when we get to the other side of the budget, there are always things we can do once we see the white papers that will help mitigate tax. So it's really important to speak to us, speak to your financial planners, and stay on track. Remember your objectives, remember why you're doing this. That's the most important thing. We will always see changes to tax and legislation, but your retirement, your future plans are what's important.
Thanks, Sarah, and I'd agree. It's important that not only do we not panic in taking such big decisions based on speculation, but also we drill down into the detail. They're still drafting the paperwork in terms of how the pension changes from April 2027 are going to work. So important that we understand the full picture before making any changes. Well, thanks, Sarah, for joining me today.
Thanks, Ed.
And thank you all for watching on today's episode of Inside the Red Box. Join us next time as we discuss and digest the budget when it comes out. Thank you.
Thank you.